As Robert Kiyosaki always warns, the unfortunate lesson most people are taught is to, quote, go to a good school, get a good job, save money, buy a house, and invest in a balanced portfolio of stocks, bonds, and mutual funds. This simply doesn't help the majority of people for so many reasons. Learn how to get ahead of the majority instead. You came here for the truth, so let me unveil that for you. Today we're going to look at some of the topics of saving, investing, thinking smart, thinking out of the box. I'm going to talk about a lot today. If I don't get through it very quickly, we are going to go over time, so I'm going to move through this fast. So let's get into it right away. You've heard this all before, everybody knows it by now, so I'm just going to touch on it very briefly. It's important to save money, not to spend hours and hours clipping coupons and driving from supermarket to supermarket to get 50 cents off your groceries, but wherever there are options to save money, you should always do so. I'm going to cover this further in a moment. There are no magic formulas, though we often hear about saving 10% of your income so that you can invest it. For me, this is simply too general of a statement and suggests that you should perhaps spend the remainder. Why is it 10%? Why isn't it 12%? Why isn't it 8% or 20% or 30%? I believe that you should do what you can to reduce all of your expenses and save the maximum amount. Why does it have to be a particular percentage? This just makes it easy for individuals to understand, to grasp, but I think that you know the concept and you could apply it and supercharge it. The first order of business is to write down all of your monthly expenses, every single expenditure that you incur regularly, your mortgage, your rent, your property taxes, your groceries, all of that. Then look through your previous statements and receipts to see what else you buy throughout the week. You may not realize it, but those coffees, teas, parking fees, and other smaller expenses show up often and will add up at the end of the month. I don't think a lot of people realize this, but those $5, $2, $10, by the end of the month, it is a significant sum. Is it possible to reduce or eliminate some of those? See what you can do to eliminate, reduce, or replace bringing coffee from home, your lunches, buying in bulk, etc. You know the drill. I'm not going to beat a dead horse here. Monthly expenses. Every single person is paying for bills that are not set in stone. They can be negotiated. I don't think a lot of people realize this. They're paying for services and they feel disconnected from that particular company. You should know them by name. You should call so often that they're annoyed when you call. They're gonna give you a discount, and trust me, it's worth it. Call every single one of your providers and ask for a promotion. Have a competitor's promotion available so that they can compare and potentially price match it for you. Recently, I saved 50%. This is not a joke. 50% on a monthly bill simply by making a phone call. Even if it's $5 or $10 per month, that's money in your pocket rather than theirs. And personally, I'd rather have it in mine. Ask about bundling your services, switching services that you have with another company, bringing it over to there, reducing your plans if you don't really utilize all of it. Ask for more and reason with them. Make up something if you have to. Tell them you're a single person, you're on a fixed income, you simply can't afford it. See what you can do. Can you talk to your manager? Please, I need your help on this. If you try and squeeze them a little bit, but be respectful to them. Do not try and take advantage of them in a way that you know the individual you're speaking to oftentimes cannot go above their own head. You might have to speak to someone else, but of course at the same time understand that there's only so much that they can do. Choose wisely. Now that you have saved every bit of money you can, you need to make your money work for you. If you're working a 9-to-5 job, you know your salary, and this allows you to roughly calculate how much disposable income you will have. You can buy a liability, you can buy an asset, or you can save your money in cash. You decide what you want to do, but obviously one is going to work in your benefit and one will work against you. I've talked about this concept before, and this is my entire philosophy. It's the golden goose. Accumulate assets that pay you on a monthly basis. Over time, what started as a trickle will surely add up. This passive income will eventually pay for your expenses. If you purchase something with the intention on waiting for capital appreciation, as soon as you sell, you've killed the golden goose and will pay a hefty sum to the taxman. Accumulate assets, accumulate wealth. I talk about this in both of my books, but of course Robert Kiyosaki also talks about this. And in fact, I think I'm going to make an entire video about the principles I've learned over the years reading Robert Kiyosaki's work. You must know the 4 asset classes, and paper assets are only one asset. I don't think a lot of people realize that. Debt. Pay off your debt first. This is so critical, and although it's considered to be a ridiculous statement, particularly in the last few years, I stand by this statement. The debt we carry will ultimately be a burden to us until it is paid off. What financial advisors and others will say is that if you expect your stocks, for example, to give you a higher return than the debt you borrow, then it's a no-brainer. Borrow as much as they will give you. But, hold on, this is absolutely true. However, what will the return of that investment be in 3 years, 5 years, 10 years? These are factors which are impossible to predict. How are you going to know what that particular stock is going to be worth in 3 years from now? You cannot determine that unless you have a crystal ball. And if you do, can I borrow it, please? I'd really like one of those. The point is that if you can invest in something that will pay you, even if it's a small sum, it's going to add up over time, and then you can continue to accumulate instead of worrying about this, and you can't sleep at night because you're not sure whether that asset you bought will be there for you when it's time to retire. More debt. If this is a, quote, guaranteed passive income investment like a rental property, then you can assume a particular vacancy rate throughout this period of time. You can have a reasonable assumption as to what your income will be. So you could do a basic calculation based on the history, based on the environment around. You can look at this, the comparables, and suggest I'm going to have a vacancy rate of about 90% throughout this period. I've got the rents at this rate. I have them increasing at this percentage. As a result, this is my income, gross and net. I see what I'm going to be making. I've got a pretty good idea here. Now, the value of that property, well, I can say maybe it's going to be worth somewhere around the same. Maybe it'll appreciate. It's been appreciating for 5 years, but ultimately I don't really know. What I do have a good sense of, however, is that as long as there's a renter inside of this property, I'm getting the cash. There are no guarantees, but one thing is certainly more certain than the other. In terms of the appreciation of the property, this is nearly impossible to tell, particularly in the short and medium term. Chasing capital appreciation while carrying debt is purposely adding unnecessary risk. That's the way I look at it. You can invest one way or another, but the way I look at it is that you're adding risk when you don't really need to be. Contractor. In many companies, contractors are hired instead of a normal full-time employee. The benefit is that certain expenses of these contractors are then write-offs. You can write off your internet, your cell phone. If you work from home occasionally, you can write off some home expenses too. Suddenly your computer and other tools or equipment are business expenses which will reduce your taxable income. Things that you might have needed to buy anyway, now suddenly you're getting a write-off because of it. Depending on the company, you could potentially negotiate becoming a contractor instead of a full-time salary worker. Of course, this may have disadvantages, but you must weigh these out for yourself. The company would probably prefer it because they wouldn't need to pay healthcare or benefits. Now, of course, if you buy that, it depends on your area that you live, but this may actually be a write-off for you as well. So that's something you got to look into, and a lot of people are unaware of this. In the company, same position and everything, you simply have to talk to that company and you could make a big change and actually in the end making more money because of it. New skills. Learn a new skill today. Whatever you may be interested in, there's information online that you could begin your search. Take a look at Google Trends to see if other people are also into what you think might be a good skill to have. Programmer, AI, robotics, skilled labor, technical skills, healthcare related. These are all potential good ideas where it depends on you and your desires and your skills that you have already. Maybe you could build off of those, or maybe you want to go in a completely different direction. Anything that can be sold, packaged, or sought after by employers. It doesn't need to be creative or some sort of new invention, just something that people or businesses want. Have the skills, have the products that businesses and people want them in the future. That's why you're looking at Google Trends to see, is this something that's building up or is it coming down? Success. Do you know a successful person? Someone who has a successful business? Talk to them, buy them a coffee, email them, use their services. Any chance to get some useful information from them. Be kind and courteous and respect their time. You have a possible fountain of information coming towards you if you seek out the right people. This is why reading books is so important, because you can get the information from individuals who aren't even alive today. We're talking about people who are connected in the businesses or the industries that you are interested in. You can get their knowledge condensed down into 200, 300, 400 pages, and it is so valuable for such a low price. Someone who is already ahead of you can give you the tips that you need and help you avoid the pitfalls which set you back. If you're going into some sort of business, somebody else who has already done it will say, no, don't do it this way, do it that way, get your products from this place, not from that place. They've already gone through it. That could potentially save you a lot of money, a lot of hassles, maybe even bankruptcies. If you don't know anyone, start looking at groups online in what you're interested in. Start asking questions and answering what you can. Try to provide value wherever possible. And here is some final tips. Spend less time wasting time on things that really don't matter. Spend more time reading, learning, and taking action. Listen to audiobooks, podcasts, or videos on 1.5x or 2x to potentially double the knowledge that you get. Learn while in transport, walking, biking, exercise, in the car. Learn in this time frame. If you have a business or product you want to sell, make sure people know about it. Have a website, your social media, your blog, talk in person, online groups, spread the word. Make sure that you are creative, that you are digging, that you are learning on a daily basis. I have information in my books, but if you want to check it out, for now, I have a playlist, multiple playlists in fact, here on my channel that will have a lot of valuable information of things that are looking outside from the normal aspects that people are always teaching, and that's what's important. This is the alternative news. So those were a few things that I wanted to cover today. Remember about the golden goose. Think about being creative. Always invest your time wisely and make sure to manage your risk. I have a lot more information. I have my books, of course, but definitely check out the playlist that I have on my channel, because I have a free e-course on here. I have my playlist that's called How To and Solutions. I have another one that's all devoted to making money. I am working on a course right now that is basically complete at this moment, which is the Amazon GPS, teaching people for free how to sell on Amazon. So that is coming soon, I promise you, and a lot of other things to check out. So I will link to one of the playlists at the end, but definitely just go to the channel and seek that out, because you're going to see a lot of information that's available to you. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a like, you are supporting me and helping to push these videos higher up in the search rankings, so I do appreciate that very much. If you want the financial education that was not taught to you in school, these two books have everything you need from top to bottom, A to Z. You can get all the details at the link in the description. If you want the audiobook, that's available at themoneygps.com. Here are a couple of the playlists right here. You can check them out. Just click on one of them. It will take you over there, and I'll see you in a moment.